C3 AI and Big Bear AI are two AI companies that are going after the same market. But which one of these two is the better AI stock to buy for long-term investors? That's the question I'm going to answer in this video, comparing these two AI stocks on several critical financial metrics, including revenue, cash flow, return on investor capital. I'm also going to compare the two on valuation by sharing with you my proprietary discounted cash flow models for Big Bear AI and C3 AI, which calculates what I believe is a fair value for these businesses. I'll do all of that in this short video and answer the question of which one I think is the better investment here. All right, so the first thing I wanted to compare these two on is revenue growth. And I have data going all the way back to 2019. So let's start with C3 AI, which has increased its revenue from 91.6 million up to 389 million in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 31.7%. Meanwhile, Big Bear AI has grown its revenue from 73.6 million to 159.9 million, which is good for a compounded annual growth rate of 15.9%. Also, C3 AI is accelerating revenue growth, meaning the revenue growth is increasing, while Big Bear AI is stagnating. Its revenue growth is not increasing. In fact, it's slowing down. Between 2022 and 2025, its revenue has only increased from 155 million to 159.9 million, and that time period included acquisitions that the company made. So organic revenue growth is not working very well for Big Bear AI. By the way, I'm getting these charts from finchat.io. They aggregate data from hundreds and thousands of companies worldwide, and they offered my viewers a discount for joining if you use my affiliate link that's in the description below. The next metric I wanted to compare these two on is return on investor capital. And in this regard, Big Bear AI is doing better than C3 AI, but they're both doing poorly. Big Bear AI generated a return on investor capital of negative 14.9%, which is better than the negative 24% they generated in 2022. Remember, back in 2022, Big Bear AI made a big cost-cutting initiative. That's when tech spending slowed down considerably, and Big Bear AI took that opportunity to cut costs to get itself on firmer foundation, and that's paid off relatively well, not significantly well, but relatively well. Click the link below to watch the full video.